Harrison style. Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Andrew Cox is going to give us a shipper update. But first, we're going to go to Zach Strickland with the carrier update, brought to you by PowerFleet. Stay tuned.
Welcome to your carrier update on this Wednesday. I'm Zach Strickland, and today let's check out some more freight volumes and see where they are headed. So looking at this blue line right here, we have the outbound tender volume index for this current year, and on top of that we have the outbound tender volume index for the 2 previous years for about the past 2 months or so, or month and a half I should say. Just to give you a perspective on how the freight market has changed year over year thus far, we're looking at mostly April here. So 2019 right here in the orange, I can tell because of that Easter dip. The 2018 right here in the green, and remember 2018 was supposed to be this big robust year. We had volumes well over that back here in early April, late March, and yet it's a very flat line in the month of April and May. We didn't really start to see those volumes really pick up significantly again until mid to late May in 2018. But you can see the early stages of that right there in the green line. The OTVI popping back up over 10,000 around May 12th in 2018. We were still sub 10,000 in 2019 at about a 9,800. Right now we're sitting at a 9580.9 in 2020. So it seems. So 95 is still not a great score for volumes. We are recovering, however, from one of the softest freight markets we've had since this index was created for sure, but for a long, long time because of the COVID-19 outbreak, bottoming down here around an 8,600 on April 16th. So we have come a long way, almost 1,000 points up over the last 3 weeks or so. So we are in a recovery pattern. We didn't think we were going to be over 93, or I didn't think we were going to be over 9,300, I should say, at this point. But here we are, close to 9,600 in the middle of May. So this is a really good sign for the carriers out there. You should be seeing at least some form of recovery, even though we're still down year over year by a couple of percentage points. So good news there. What is that doing to capacity, however? So this is the tender rejection rate for the last couple of years. Outbound tender rejections here in the blue mountain line for the current year. Previous year in this purple line, 2019, a pretty soft, very stable year in terms of tender rejection rates. We averaged around a 5.5% tender rejection rate all year long. Not a lot of volatility except for those seasonal peaks around June, a little bit around Labor Day, and then again at the end of the year in Christmas. You can see 2018, extremely volatile year. Tender rejection rates up above 20% all of the spring in 2018. Very significant capacity disruption in 2018. Now we are, after climbing out of this trough, or falling out of this mountain, I should say, in March, we are now right around 2.98% compared to 4.5% this time last year. So very different freight markets year over year over year. We can't seem to find a nice rhythm with the tender rejection rates, even though 2019 kind of lulled us to sleep a little bit in that pattern of roughly around 4 to 5% all year long. 2.98% coming up, however, slightly since the start of May. So capacity is having some changes. That, of course, includes reefer and dry van rejection rates in that number. Looking at the overall freight market in terms of volumes, this is a tree map of the outbound tender volumes for the United States. Anything in green, week over week changes. Week over week positive changes, I should say. Anything in red, week over week negative changes. Out here on the map, anything in white and the light blues are going to be positive increases. So looking at the map, you can see geographically speaking, the Southeast, right everywhere, right around here, except for the Nashville market and some of the larger Atlanta, etc. Southeast seems to be cooling off a little bit, except for Nashville and Birmingham market a little bit, and over there in the Carolinas slightly. But everywhere else, we've got a mixed bag. Not a lot of consistency throughout some of these. Of course, a lot of these markets are smaller, so they're not as easily identified. That's why we have the tree map here to pick out some of where the biggest markets are. A certain market that I wanted to point out is the Miami market. The Miami market, of course, not a market we tend to like to go into as a carrier, but volumes are spiking. On the dry van side out of Miami, reefer volumes are falling. So again, Miami becoming a little bit better than it used to be. Tender rejection rates also increasing. So Miami's not as bad as it used to be, carriers. Pay attention. That'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your shipper update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Anthony, today I've got one of the most important indicators I think that we're going to need to be watching over the next 3 weeks to get a look at the demand from U.S. shippers and also therefore a look into the U.S. consumer. So this is Blink Sailings. This is data from EC, Copenhagen-based ocean container schedule company. And you can see that May and June we have 19 and 18% of the capacity that has already been blanked, and those schedules are set. Those things are not going to be changed from now on. There may be a couple in June, but what I'm really looking at is this July number. That's the beginning of Q3. That'll be a really good sign of how far out these blank sailings are going to be extended. We have about 3 weeks before those decisions need to be made, so by mid-June we'll know exactly what the demand from the U.S. shippers is going to be into the third quarter.
So with all of this coming up, all these blank sailings, what does that mean overall for utilization?
Well, the good thing about, the utilization could further deteriorate the lag on imports and further deteriorate the demand from shippers if those ships that were coming were only running 75 or 80%. But the good thing is that that is not what's happening. We're actually having the ships that are coming into the U.S. ports are full. They're highly utilized. So that's good on that front. But this July number and into even after that, August and September, will be really important to look about what the recovery is going to look like, the demand from U.S. shippers.
Right, and that's a big part of it, right? Demand, and that's really what's going to drive overall production, even if the economy starts to come back online.
Yeah, that's right. We can take a look at the U.S. imports here. So the first thing to note is I've got U.S. imports in total in blue, and then I've got the U.S. imports from China in green. You can see how tightly they're correlated. We're still highly intertwined with China. But you can see that this pull through the demand that hit in the first week of May was actually the ships that came in. It takes a couple weeks for those customs to be processed and go into the data. It actually came in late April, and that was just a pent-up demand that really got pushed out once the Chinese lockdown was ended. But since then, you've seen demand fall off significantly as the country's been in lockdown. But here is when we're going to see further deterioration in May, probably the bottom here at the end of May. But then this is when I'm looking forward to the third quarter, how far these blank sailings will be extended.
And that's really big. So when we're looking at that close correlation, as you mentioned, it's all going to be driven on demand, a lot of pull forward. Now it's going to be really looking at to where that second wave or that next wave of production is going to come from. There's been a lot of speculations, of course, with manufacturing and some consumer products as the economy starts to open back up. But it's really almost anyone's guess right now as to what's going to really prod that kind of second wave of production.
Yeah, this is something you and I have talked about a lot about projections and our models that everybody's trying to make. I mean, there's so much uncertainty right now that a lot of us are just guessing. We don't know what's going to come on. We have some hope that May 18th number, this will be next Monday. That's when the auto manufacturers, the Detroit auto manufacturers, are supposed to come back online, at least in some sort of reopening. I have high hopes that they are positioned well to be able to kind of make the blueprint of what the wider manufacturing and industrial recovery and reopening will look like, but that's to be foreseen.
Right, and one of the things that is almost off of everyone's minds now, it's been so long, but tariffs, they're still on the table, right?
Yeah, I mean, there's even more ramping up of discussions. Like you hear news stories coming out that there may be another trade war becoming, more tariffs coming in. So that's going to be something to watch as well. That will definitely impact import volumes.
Right, and Andrew, we have a ton of resources here at FreightWaves. I think Greg Miller wrote an interesting piece.
He did, yeah. Greg Miller wrote a really good piece on this. He's been on top of the ball, writing pretty much every other day about blank sailings, how far they can go out, how far they've been canceled. I would definitely check out that to get better and further insight into this. And also, we've also got a lot of papers coming out in Passport. We just recently, last week, came out with a pharmaceutical supply chain paper. There's been a lot of supply chain disruption in the pharmaceutical supply chain in the last couple of weeks. So we wanted to get a hold of that. We did a survey of executives, and we wrote a paper. So check that out at freightwaves.com/passport.
Excellent. And I mean, the content that's out there, I mean, you and Kevin Hill on Great Quarter Guys, all that good stuff. So it's almost like really put together the entire picture from your in-depth research to palatable podcast and here on FreightWaves Now. So Andrew, thank you so much. Anything that we're gonna or I want to hear a crazy call from you over the next month or so.
Crazy call.
Yes.
Well, the way that volumes have been pumping up, I mean, it seems like if this economy actually does reopen and we don't have another outbreak of COVID, I mean, we could maybe see those pre-COVID levels of OTVI relatively soon. I'd say maybe the end of July, and that's coming. I mean, that's very much against the calls of Noel Perry and some other economic leaders. They've said that it might be 2 years before full volumes come back. So at least on our contract front, I think things could pick up pretty quickly if we don't have another outbreak.
Got you, Andrew. Love it. Thank you so much. Insightful as always. Thank you so much for your insights. And thank you so much for tuning in. That's going to do for this Wednesday edition of FreightWaves Now. But the content doesn't stop here. We're always streaming around the clock. So check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.